My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Another great episode today. Zooming in from Seattle, Washington, we've got a very experienced apartment building, multifamily entrepreneur, John Todderud, and he's been doing this for over 15 years, syndicating for just under 10, and he's been seeing a few different market cycles. So we're looking forward to having a chat with John about what he's up to and why now he thinks now is the time to start buying again. So John, welcome to the show.
Dave, thanks very much for inviting me. Really appreciate being on, and look forward to talking with you and sharing some hopefully helpful insights and being able.
Sure, you will. So, John, let's get started. What? Give us a snapshot. What does the portfolio look like as of today, mid 2025? What do you got? Where are they at?
Yeah, I have three properties, mostly larger properties, and they are spread through the Midwest. One in Kansas, another one in Oklahoma, and another one in Texas, and they are all have had their struggles doing well, but they're all lessons. I mean, it's so been so valuable to have these experiences and learn from them, and brought investors along and looking to do more. I like the Midwest.
You like the Midwest. All right. So you're in Washington State. You're not buying anything in and around there. You're buying it in the Midwest. So do you use outside property management? Do you guys have a team out there? How does that kind of work?
Yes, I use third-party management. And really, it's a big part of our challenge is finding the right property manager. It's so critical and have not always made the best first choice in those. So.
That's a learning experience, isn't it? So John, what's kind of your buy box? What kind of properties do you like to buy? What are you looking for in the property and in the market area?
Yes, I look for an opportunity to boost value primarily through increased income. There's opportunities, of course, through reducing expenses. Those are there. They're viable, tangible opportunities. I tend to favor opportunities where you can make improvements, things that look nice, that are functionally better for a tenant, and nicer, cleaner, safer conditions. Everything works. It looks nice from the outside, looks nice from the inside, and finding a property where interiors are maybe old classic interiors where they can be renovated. We can take on projects like maybe replacing countertops and cabinets and appliances and flooring. If there's a lot of carpeting, we might put in LVT. We look for electrical fixtures and certainly painting around. We usually will start with the exterior though. If the outside looks crappy, but the insides are all nice, somebody drives up, looks around, decides to move on. And so we're doing the outside first. We want to know that we are adding value for our tenants, that we're creating a community. We have nice people there, and from that we can find better tenants, better income, improve the rents, and put out market rents. And then over time, get the income of the property up. And that's what ultimately, at the end of the day, adds value to a property and makes our investors happy.
So, John, the last few years have been pretty rough for a lot of syndicators and a lot of deals in the multifamily space. It sounds like you're chugging along there. Have you been kind of in a holding pattern for a little while? Or what have you been doing with your portfolio?
We have to a high degree. I mean, each property has had its unique challenges. One of my properties has had challenges in getting occupancy out of, say, the 92% range, when really is in a good area, and everything said we should be a much higher occupancy. We put a few changes in place, changed property managers, and and boosted occupancy, and now it's a steady 100%, and we're increasing rents. And I mean, I don't like normally to be at 100% for a long period of time, but it's performing extremely well. It took a lot of work to get it there, but it's performing well. Another property had property manager issues over the last year, and it was just like painful watching it. It's like how did this happen? And ultimately back to ourselves. We I wouldn't say none of us were not paying attention, but we didn't act quickly enough to get better management in place. And then the process of getting a better manager, it's not a quick fix, as
Yeah.
anybody knows. You get the better manager, they're dealing with tenants that are bad, that are not paying rent, that have to be um, you have to replace them. You have to do whatever's needed. Either tell them that they need to move out or not renew their lease or evict them. And those are not pleasant activities. But we've done that over the last 6 months, and now we have income on that one improved as well. I mean, there are issues, there's a myriad of issues that come up that a smart property manager's got to stay ahead of. You just have to be a step ahead of all that and anticipate things and know and have your metrics set up correctly so that it's not like all of a sudden, no, occupancy is bad. You knew it was coming because of certain things that happened before, like the leading up to it, and really things that you could have corrected or maybe taken action about. But you have to be on top of those things. We've dealt with delinquencies and and tenants who are disruptive, and then physical issues with the property that just weren't fixed properly before. That especially if it's water related. I mean, my goodness, so you get a big freeze coming around and things just don't work. Water shutoff valves don't work, and then tenants are displaced, and then certain exterior wood structures are aging and rotting and not fixed properly. And then, yeah, it's just staying ahead is it's a constant challenge and making sure of what you're getting into when you buy the property. But we're strong and past most of those things at this point. So.
So, John, it's been rough roads for the last couple of years, that's for sure, with interest rates and the price of apartment buildings. But you're putting in the information that you sent ahead of time to get on the show that you think you're kind of poised for some really good deals. Tell me a little bit about that.
Yeah, yes, the deals are coming. You have to be diligent. And part of the reason is that, for better or for worse, our competition as buyers has improved. There are fewer buyers out there. A lot of people have just walked away from the industry, or they're not buying now, or they're seeing too many red flags in the industry and blood in the streets, so to speak. And all these
Yeah.
prolific investors, certainly Warren Buffett, but I've read quotes from Baron Rothschild from a while ago. All these guys, 50, 100 years ago, they're all saying when there's blood in the street, then that's when you should be buying. And even if the blood is from yourself, is one of the quotes that I read. And so I'm a believer in that. I think yeah, it's not looking good to a lot of people. Interest rates and sellers are not getting the prices. They're not putting the properties on the market. They're not getting the prices. And so there's not a lot of properties out there, but man, there's not a lot of buyers. Well, there are fewer buyers out
Mhm.
there now. So transaction volume is down, which is unfortunate for brokers. We need good brokers. We need them active in the market. But I see this, and I'm talking to brokers, and I'm hoping that they're finding good deals out there. I do see a few, and some of them are distressed. Some of them are ones that it took a while for them to get their property values. But another interesting thing that's out there, I have never been a buyer of something that's fully renovated. And I've passed on a lot of deals in years past because it's all renovated and it's like a turnkey operation. And I say, oh no, thank you, because
How
that's
can
what
you
I
add
do.
value if it's already
I
renovated? Yeah.
know, exactly. But those properties are actually good opportunities today because they added value and they can't sustain it. They've got a financial issue, maybe a debt I mean, a loan that needs to be refinanced and they can't refinance it.
Mhm.
They've done the heavy lifting. They've got to sell the property. Those opportunities are out there, and I'm all for them. If it's not a lot of work, but mainly just getting better tenants at a higher rent level, then those are great opportunities.
So, John, through these rough waters that we've had the last couple of years, a lot of syndicators have had to have uncomfortable conversations with their investors, their LPs. Disbursements haven't been happening. There have been some cash calls, these kind of things. So, it's created a lot of nervousness amongst investors to invest in more multifamily properties. Have you seen any challenges with that? And if so, what are you doing to raise capital in today's challenging environment?
Yeah. I see these challenges all over the place. I go to multifamily conferences and I talk to other syndicators, large operators, people who have been hugely successful and just millions and millions of dollars worth of assets under management, and just very admirable people, good people who've done the right thing, yet they're having problems. A lot of the properties are in some certain level of distress.
Yeah.
My properties have been in distress. Fortunately, today they're not. I mean, I've had properties. I won't go into all the long, gory stories, but I've had, when I was starting out and on smaller properties, 3, 4, 11, 15 unit properties, and had problems with things that weren't working. I knew what the solutions were, that you have to knuckle down and you have to get things fixed. You can't just dump your property on the market. And so I've done that and I take that to heart. And when I've had problems in my current properties, even on a larger scale, I know the solution is to get the problems fixed, not to pass the problem on to somebody else and take a beating. And so yes, we've gone through that for various types of problems. It could be physical distress or occupancy distress
So
or
I guess what I'm asking is under these circumstances, with investors being nervous about investing in other deals, other apartment buildings, how are you dealing with that challenge of raising capital in today's environment?
yes. I I I deal with it by being upfront with them,
Mhm.
letting them know that these are circumstances that uh, are, I kind of describe it as once in a generation, and maybe there's a little bit of disillusion to that, but you have to be able to explain to them that we don't think the problems in today's economy are getting much worse. And there's a lot of contrary opinions to that. I'm not an economist, and I wouldn't say this is my prediction or anything, but being open and upfront to investors and saying these are the risks, these are the things that could happen, these are the main reasons why properties over the last 2 to 3 years have been under distress. And you can run through a list of them. Interest rate, floating rate debt is one
Yeah.
thing. Having a shorter term, having to refinance is another, but also buying in a market that has had a tremendous amount of new construction. I mean, those markets, you can see what's going on. You know that who's taking out permits. It's 2 or 3 years. There's going to be a lot of new development coming onto the market, and that's competition. Explaining those things to investors. It doesn't bring them around, though. I would say it's not a solution, and you're absolutely right. And your point being that investors are stepping back, super cautious today. They are. And you'd like to tell them that stop. Today's not the time to be cautious. You need to be jumping in. The market's going to get better. These things run in cycles, and
Yeah.
this is a clearly a cycle, and you should be investing. But I can't tell them that. I mean, I make that recommendation, and
So I guess is the solution to find new investors who haven't been burned in multifamily before and kind of show them the opportunity and explain the good and the bad, but kind of show them why now is a good time. Is that a way to get around that?
that has to be a big part of it. And part of the
Yeah.
reason is because existing investors are trying to get their capital out of deals, and
Mhm.
deals are not transacting. Their
Yeah.
capital's stuck, and maybe hopefully they'll get everything they invested, but a lot of them are losing. But yes,
Yeah.
it's new investors, and there's a constant need for it.
Yeah, no, that makes sense. So, John, as we wrap up our interview, what are your plans for the next? Well, we're halfway through 2025 already. What are your plans for the rest of the year and into the new year?
I still am a buyer. I'm an optimist, and because I see the market turnarounds, but so I am out looking for these opportunities. I'm crossing my fingers that this big beautiful bill is going to pass with the bonus depreciation, cost segregation, great depreciation deductions for new investors, and some other benefits. A lot of rents have been stagnant and they're going to start improving. A lot of owners have held their properties for too long. They're going to want to sell. A lot of good things are going to happen this year. And I want to be able to participate in it. I want to be owning more properties by the end of the year.
Nice.
That's my
Very
goal.
good.
So
So, John, if people want to connect with you, where should they go?
the easiest is my website, www.cardinaloak.com, cardinaloak.com.
Perfect, John. Thanks so much for being on the show. It's been a lot of fun.
Thank you, Dave. My pleasure.
All right, everybody. See you on the next one. Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.